Well, it could be taken as that. There are a few factors, obviously, of which Brexit is one of them, but not the only one. Certainly, I think what the Bank of England is trying to do with this move is try to stimulate the economy. In other words, they are reducing the base rate, which is the minimum lending rate, with the idea, obviously, that people, companies, etc., borrow more money, and hence the spending factor is increased, which in turn, would move the economy. That is the underlying, I think, reason why the cut has been done. Having said that, it is not the only factor. You would need to consider other economic factors as well, such as imports, exports, etc. But certainly, the first step is obviously to encourage borrowing.
Okay, so good news for borrowers, people with mortgages, for example, but not such good news for investors.
Absolutely, and those people who have, in particular, base rate tracking mortgages must be very happy because, in fact, their repayments will go down immediately as of this month, and they will actually see a savings in mortgage repayments. Like you say, for savers, it's completely the opposite. Already, deposit rates are very, very low indeed, and this extra move by the Bank of England will mean that undoubtedly banks will reduce even further their deposit rates. So not good news at all for savers, and in particular pensioners who might have their monies with retail banks.
Do you think that the base rate might come down further still?
Well, there is a possibility. I am no economic expert, but yes, I mean, the Bank of England has put this measure in place to sort of weather a bit the storm in which the UK is going through now regarding the uncertainty, in particular after Brexit. And if the results are not there, if the economy does not kickstart again as they would wish, there is obviously a possibility that it could go down even further, yes, and the banks would need to adjust accordingly.
As you say, you're not an economist, but what's your gut feeling as to what this will mean for Gibraltar? Will it be positive or negative?
I think that for, in particular, youngsters who've bought the properties recently, and for generally most of homeowners who have a mortgage, I think most of them would be base rate trackers. It is good news in that sense because they're saving money. So at the end of the day, it wouldn't have a major impact negatively if you know what I mean. Because at the end of the day, people are saving money, the same as corporates and trading companies. If they have loans, etc., which are linked to base rate, they are going to find that the repayments that they will make will reduce as well. So not necessarily bad news. Yes, on one hand, this could weaken the pound, which it already has, in a place like Gibraltar, being so close to Spain, and the necessity of having to use euros. There is a strong possibility that the euro will become more expensive for us.